News, Bitcoin, Shiba Inu, Coinbase, and reacting to crypto comments from the second most hated man in crypto. Actually, it might be the first, Maddie, but I have to ask you, Maddie, big week we had this last week. How are the markets doing?
I think the markets are digesting. First of all, Bitcoin's moved quite well here. We're seeing some altcoins do a little bit of catch-up moves. Even though the equity markets have seen some pretty decent knockbacks on, the recent CPI data that came in hotter than expected, showing that inflation isn't as tamed as we thought it was. Still showing quite a bit of resiliency. So I'd say across the board, looking relatively strong. I think still have some catch-up moves potentially here for the altcoin market, but overall looking strong. Corrections are always, on the table, but overall a lot of bullish momentum in the markets across the board.
Team, this Wednesday, Ask Matty Show, 2:30 p.m. Pacific. Leave your comments down below. If you have questions for Matt here, become a Crypto Charge member. Click the pin link in the comment section down below. Use code YouTube to get how much off, Maddie?
That's going to be 50% off any membership if you're choosing whether it be monthly or yearly. You always save a little bit more with the yearly plan than the monthly plan.
All right, Maddie, let's get into the content here. We got some pretty interesting news articles that is popping off in finance, popping off in crypto. So let's get into it. MicroStrategy's unconventional Bitcoin bet is now worth $10 billion with a B. Public companies that own Bitcoin. So I have this chart here. So it's public companies that own Bitcoin. As you can see, MicroStrategy leading the way here, and following that, just number 2, Marathon Digital Holdings is way below that, Maddie. How big is this for crypto? Is this even important to crypto with these companies buying up all this Bitcoin?
So from like an immediate price reaction standpoint, I don't think it's as important. Some of these orders that you do see from these larger companies too are OTC or over the counter, meaning that they're just taking from one party and swapping it to another party. We're not necessarily seeing that impact directly on exchange. So I want you guys to remember that not every transaction has to be an exchange-based swap. You can see an OTC order, which can have lesser impact on the markets because it's equivalent of me saying, I'm taking my house and I'm giving it to John, but I'm not putting my house on the market and then, adding to the inventory that's available on the market, and then people can bid, and we can see supply and demand affect that. I do think it's exciting that MicroStrategy has such a nice profit now. I think that I was reading it that Michael Saylor didn't even start allocating to Bitcoin until late 2020. So first of all, really nice time to consider getting into the market. But then there was a very big time where everyone thought Michael Saylor was a big idiot and lost his mind because he just continued to double down and do what he had to do to reissue new stocks to continue to buy Bitcoin. And there was times where sometimes his DCA just seemed really nonsensical, but now he's at $10 billion in profit. So, I do think that long-term that he's going to do really well. He's probably going to be one of the bigger institutions that has one of the largest Bitcoin holdings outside of the Fidelities, and it's hard to keep up with those guys when they have trillions of dollars at their fingertips potentially to allocate. But I do think it's important that we continue to see this adoption and growth, and overall does long-term take away from available supply of Bitcoin to put on market.
I like that. Will Shiba Inu ride the crypto bull run and reach $1 in 2024? I'm not about to read all this nonsense, but the last thing I jotted down here in the article, and I don't recall where the article was from, but it was at least they said this in the article. Achieving a price of $1 per token appears virtually impossible for Shiba Inu. Maddie, are we in agreement with this? Because we see these hype coins in the bull run, especially last bull run. We saw a lot of these hype coins pumping, and of course they crashed with everything else. Are we going to see $1, or what are your general expectations for meme coins and Shiba Inu this cycle?
I feel like the average retail investor has just this very inconsistent lens that they view through what's possible in the crypto market. Like you point out XRP or other assets that you like, and just because it hasn't performed the way they think it is, like, I'm talking about a $12 or a $20 XRP, which, looking at, the math on that, looking at, the actual adoption that sets in, those are actually relatively conservative and very achievable price targets within the cycle. And there's math that backs it up, right? Like we can look at the actual amount of transactions that happens on a remittance sector, or we can look at, business to business payments or inter-treasury settlements, and we can even apply just tiny fractions of what XRP can do to these things. And a $1 trillion market cap really isn't that insane for XRP, especially with the long-term growth of it. But then we look at something like Shiba, and people see what it did percentage wise in a certain cycle, and they go, well, it can easily do this again. Like we were reading here, there's like multiple quadrillion coins, within circulation right now. You guys have to realize how much money would have to pour into Shiba for us to get to $1, right? Like everyone, takes these amounts and they're like, well, if enough people agree that we're all going to do this, right? That's not how this works, guys. Like you have to have the money stay there, right? And even if we saw this crazy surge, right, what are the chances you're even going to be able to sell at some of those prices? Most of the time when you see these crazy blow-offs, they're wicks, and like you're not going to sell it. You're going to sell maybe somewhere close to like the top of ish or not, but like there's no fundamental backing to it. You need trillions and trillions and trillions of dollars to pour into this asset to make it worth $1, and I just don't see institutional adoption for Shiba, right? If someone in the comments can make a fundamental, case for why you think Shiba is going to be adopted, great. Let's go ahead and talk about it. Let's get into it. But I guarantee you none of you guys can. All you're going to tell me is that there's a community and there's hype, and that's what's going to bring it to $1. That's not enough for me.
Maddie, agree. And team, just to understand where we're coming from, because, Maddie's been in crypto. Maddie, what year?
So I definitely started to pay closer attention to crypto in like late 2016, early 2017.
Okay. And I bought a little bit of Bitcoin in 2017. So, team, we've been around the block for a second here. And I got to tell you, since then, me and Maddie here Maddie's been bringing it to me. Actually, our members have brought it to Maddie, and I get to watch Maddie chart some of these assets. And when we think about Time Wonderland, let's all join in on this asset for this crazy APY. Didn't work out so well. What about Squid Games? Didn't work out so well. So, Maddie, I think people need to understand where we're coming from with these meme coins. And, in the article, it said, wait. Where is it? I lost it. I wrote too much stuff down. But something about utility. Oh, here we go. Despite its efforts to increase utility and rebrand, does that mean you need a cosign from Elon? Is that increasing utility, or is that increasing the fundamentals? Or where is this increased utility coming from, Maddie? Do you know?
No, there is no utility being provided with Shiba. And this is even what I grapple with a lot of the times when we're talking about even like competitors within a space, right? Like, okay, great. You provided this L1, or you provided this other product that's an ETH killer or competes heavily with this other asset. But what are you providing that already has not been in this space for the last 3, 4, 5, 6 years, right? Like, what are you providing this proprietary and sets you apart from those other assets? Because otherwise you're just betting on the fact that you're a smaller cap and that people are going to pour in, and hopefully you have some exit liquidity there. You guys have to remember in these smaller caps too, the devs, if they don't have lockup periods, they are waiting on you to come in to buy up their tokens so they can dump on you. We've shown many, many examples of meme coins that nobody talks about anymore because they did go to zero and they've never recovered, right? Even some of the big ones in like the 21, 22 cycle, ZooCoin, everyone was talking about, gone, right? Elongate, right? Like there's just so many like oddball, like micro cap meme coin, nonsensical coins out there, and most of them won't make it, but everyone looks at the 2 or 3 examples of them making it or like doing really decent returns and they go, well, this has to apply to all of them, right? Like you can't take that broad brush and just apply it to meme coins. If there's nothing to propel it forward cycle after cycle, you are basically betting on a very small window for something exciting to happen, and if it doesn't, you're kind of in a bad spot, right?
I like that commentary there, Maddie. Let's move along here. We have some interesting stuff. We have we're going to have an interesting reaction here in a second here. So, team, make sure you stick around for this because me and Maddie are going to be, I didn't say at the top of the show, but we're going to be reacting to Maddie, one of Maddie's favorite people here. So make sure you stick around for a second. Maddie's looking at it on the notes right now. But let's get to this article first because I thought this was interesting because our guy Brian Decker, BD, was buying the bottom of Coin, and we've seen Coin stock is since the 7th of February move up over 40% and over 500% since the start of 2023. So, but this is all like, let's talk about like where's this coming from right now. Coinbase posts first profitable quarter in 2 years as CEO keeps pushing for regulations. Brian Armstrong said, "We remain confident that the U.S. will get this right." We hope, Brian. Coinbase beats Q4 estimates as transaction revenue rises $529 million. Maddie, what does this mean for Coinbase, the leading exchange here in the U.S.? Anything meaningful?
Yeah, so again, guys, you know that the main way that exchanges make money is trading fees. And here in the US, we don't offer any perpetual contracts. So that means that the only thing that you're able to do on Coinbase or any of the other exchanges is to buy spot and then sell spot, meaning you got to sell it either at a gain or sell it at a loss. And if the markets are down, right, first of all, most retail sentiment is, I'm not buying here. I'm going to wait until we get some higher lows established. Then I'll rejoin the market. Most of you guys don't rejoin the market. Then you guys rejoin at the last tail of the market, buy the top, sell somewhere near towards the bottom, and then say, screw crypto. This is a crazy asset class. It's all a scam. It's really just your poor timing. But when you look at what somebody like Coinbase or Binance US or Kraken is able to do during this time, because they don't have perpetual contracts, is they are basically just bleeding out during that time, because there's such little buying that's happening on that exchange compared to what they're used to on previous volume. We saw a really big dry up of a really big series of layoffs across the board, not just in US exchanges, but international exchanges as well. A slightly lesser amount in international exchanges. And I do think that's contributed to the offering of perpetual contracts, meaning that they're still collecting trading fees when people are shorting the market or going long on the market, right? So they have other products that are a little bit more viable during those periods. Now, Coinbase, as of right now, is completely dependent on those trading fees, and they're going to be dependent on people being excited about bullish sentiment, right? People want to buy when the markets are going up. So really, really big surprise, because we got, I think a bigger pop in the markets, altcoin or Bitcoin wise, than we were expecting previously. We're seeing some of the altcoin market wake up here as well. So I think that attributed to really much higher growth than expected for Coinbase, because I don't think anyone was expecting ahead of rate cuts from the Fed to see such enormous price action out of the crypto market. So really glad to see coins doing well. From a technical perspective, coin was offering a lot of the same sideways bullshit accumulation most of you guys refused to buy. And we finally break out. We're throwing into that back test. We're making moves higher here. So, I think that we can apply a lot of the same logic to what we're seeing with Coinbase to a lot of other altcoins that are legitimate in the same exact technical spot.
All right, Maddie, it is time. Team, we're going to spend at least 10 minutes on this. Maddie, I really want to enjoy this here, and I really hope at some point this gets you fired up. I told you before the show, hey, I'm bringing up a video. Cut me off whenever you feel like it. Just say pause, say something, because you need to interrupt this just because of the nonsense is spewed. And so let's just give a quick little intro. Maddie, you can obviously see who we're talking about. Can you give a little introduction to your favorite person, a big leader, a big proponent, a big, why don't you just give him his proper introduction here?
Yeah, obviously we're talking about SEC Chair Gary Gensler here. Gary Gensler has previously been somebody who deeply understands technology, teaching blockchain-related and DLT-related courses at colleges previously. You guys can actually go watch them on YouTube if you want to, where he actually contradicts a lot of the statements that he makes today in relation to decentralized technology. So Gensler has definitely been somebody who has pushed the space backwards, has put us as retail investors in a big loop that we've never had to be in, not just financially, but emotionally, and making people feel unsafe about the space, unsure about the space. And that's very frustrating. So I didn't see this interview that we're about to watch right now, but let's go ahead and see whatever the hell Gensler's talking about.
Maddie, if this echoes in your ear, let me know. But the point of this is, I watched it, and there was a whole 22-minute interview on what was it, CNBC? Yeah, it was CNBC. And then there was just like 8-minute clip I ended up watching because I couldn't watch the whole thing. He just basically talked about, spot Bitcoin ETFs at the top of the year, and we're just gonna skim all right past that into the meat of what I would like to hear, which was this guy, Joe Kernan. Joe Kernan is a crypto proponent, but he would probably say he's a Bitcoin guy. Maddie, this guy's a Bitcoin maxi, okay? And I just want us to be on Team Joe for just 10 minutes here, Maddie. We're not Bitcoin maxis, but I think we should act like it, because the points Gary was bringing up here was nothing new, but Joe here was at least trying to put him in a corner here, and his fellow anchors on CNBC was just like, no, hush, Joe, hush, Joe. And I was like, go, Joe, go, Joe. And so that's what we're going to be getting into right now. Let me pull this up here, Maddie. And if you want to watch this, we're starting at 1:28 on this video. I will link it somewhere so you can watch this nonsense. Maddie, if you don't hear it, yell at me, but let's get into this.
In merit neutral, I think it's a little less than neutral. Mr. Chairman, it almost was, we called it grudgingly when you finally got it from the court case sort of forced in. Is it really just neutral, or wasn't there a little bit of a, we're not sure about this thing, and buyer beware?
Let me say it this way.
Yeah.
We're merit neutral if somebody's complying with the laws.
Okay.
So if they're giving full, fair, and truthful disclosures to the American public, who gets to decide on their investments.
But you're so smart. You're at MIT, and people listen to your what you think about Bitcoin, and it is troublesome to me if I look at it and I see all the merits of it, and someone that taught about it and understands it seems to have an opinion that maybe it's, I don't know, pet rockish or something.
Okay, stop right here. So interesting. I legitimately had not seen this interview before. And I love that he immediately throws it back to MIT and he's like, you understand this tech, dude. Like, you're not just a regulator who's just been tasked with, like, you have to regulate this new asset class that nobody fully understands and has all these different implications that we don't know what could have on our bigger financial system. He's fully aware of all these benefits as well as systematic risks. So I love that he's straight up attacking him here, talking him in the sense of, like, you know for a fact that you brought unnecessary woes on this industry, unnecessary woes on exchanges. How can you call yourself technology neutral when you're doing these things? So I want to hear more about what he has to say here.
Sure, I get your words about pet rocks and so forth, but I think we also have an investor education responsibility at the SEC, particularly about those investments that are non-compliant with either the securities laws or commodities laws and so forth. So here we have an asset class, all of these 15, 20,000 crypto tokens, many of which, without prejudging anyone, many of which are actually something called investment contracts or securities, and the platforms upon which you trade, the intermediaries. They're not like in this building, NASDAQ, that has protections and against fraud, manipulation, and the like.
Just seen people lose their shirt on with NASDAQ stocks.
You can lose because there's risk. There's risk in investments. But what we try to do as a society is take some of the fraud and manipulation risk out of the markets by regulation.
Is that the problem, though?
So first of all, this is what he's trying to get out here is regulation by enforcement. And that's the approach the SEC is taking consistently here. They believe, or what they've told us is the most effective methodology, is to make sure that we let everyone know that if they're not compliant, that we will come after them. And if you want to get more information and more clarity, come and talk to us. But we know that's bullshit. Because Ripple met with the SEC over and over and over again. And there's not the only company. There's other large companies that have met with the SEC. You can go ahead and view their public calendar, even though Gary, during this entire time, decided to wait, I think it was like 3 to 5 months to actually update what he had previously done with the SEC, which is like very illegal. You're supposed to be updating a public calendar so that people know where their tax dollars are going and what you're doing and who you're meeting with. It's not the details of the meeting, but hey, who did you meet with? When did you meet with them? What was the context of the meeting, right? So there have been a lot of companies that came to the SEC. Here's what we're doing. Are we compliant or not? And instead of the SEC giving them a clear answer, they sued them and said, hey, we think this is fraud. What company do you know that wants to succeed, meets with the SEC and actively commits fraud? Right? That's a very rare thing, right? Like if Jordan Belfort wasn't out here meeting with the FBI regularly while he was, going through with all these companies, creating fraud, creating, false investments. People who want to do legitimate things don't meet with regulators often to try to help get their, product move forward. So just something to consider here.
Maddie, he's going to stumble, Gary here. He's going to stumble over his words here in a second. So I want to see what you kind of pick out of this.
Bitcoin, the underlying asset, but more the froth and the potential for fraudsters to use it that has been
this is
concern?
A field, Becky, that's been rife with fraud and manipulation. And look at all the bankruptcies. And you've had on this set people talking about those various bankruptcies. And it's not just one entity. It's entity after entity after entity. And then investors are just lining up in the bankruptcy court.
What do you make of this?
Should I pause here?
We can absolutely pause here. You're gonna have to edit this guy. What the f are you talking about, Gary? Like, genuinely, what are you talking about? First of all, if we talk about protocols with themselves, as somebody who's, by the way, an expert in blockchain and DLT, says bankruptcies. How can a decentralized protocol go bankrupt? It's not possible. It's genuinely not possible. Do you know how this is? I know this is not possible. Library credit token can be traded today. The foundation has $0. They have been completely disgorged of any money that they possibly had because of the SEC lawsuit. But guess what? Library tokens can still be traded today. Now, are they very valuable? No, but there's still a market for them. Why? Because it is a siloed, decentralized protocol. And that's what it comes down to. This is absolute nonsense. And what he's trying to do is he's trying to cram the idea of DLT and put it into the SEC box. And it doesn't fit there. And we know that it doesn't fit there because companies can't come forward and say, hey, I want to fill out this form to become registered with the SEC. It's not possible right now. And he knows that. He knows that. So he's trying to take the average person who doesn't know any better and saying, well, these companies like Bitcoin, not a company, we all know that, right? Could go bankrupt. So I would probably personally pose the question to Gary is, well, Gary, how could Bitcoin go bankrupt? And he knows that there's no way to answer that question. So I hope that he gets more tangled up here as they continue to ask some very forward and good questions.
Yeah, Joe's about to get into him right now.
Investors are just lining up in the bankruptcy court.
What do you make of, this goes to the underlying piece of this. You've heard Jamie Dimon say that he would close it down, that basically Bitcoin
I've
you've
heard
seen the
him say
comments,
that.
right? It's not just that he closed it down, that he would say it's used by drug dealers and used by folks who are doing all sorts of illicit and terrible things. There's very few things that trade today that people talk about like that. Now, there are obviously frauds and things that happen, but maybe not like this.
Like the dollar is like 100 times more.
Well, I know that's your perspective, but I'm just...
No, it's not perspective. That's not perspective. There is double-digit GDP that is projected right now to be used for illicit activity, and that's only the money they can track. That doesn't include all the money they can't track, all the money that's used for human trafficking they never find, all the money for heroin and fentanyl that they never find, right? This is quantifiable money they have seized and disgorged from illicit groups of people, right? And that's guaranteed double-digit GDP. So first of all, this is not speculation. That is a fact. So I like that they try to roll back on that.
That's true, though. This is how much has been money laundered with Bitcoin. This is how much. This is Bitcoin. This is dollar.
Yes, Joe. Look, here's the Jamie Dimon quote. The only true use case for it is for criminals, drug traffickers, money laundering, and tax avoidance. I know, but we have a guest.
That's his opinion.
We have a guest, Joe. What is your opinion? And what is your opinion that we have something trading on the exchange for the public that has this type of use case, at least as described by the president of one of the largest financial institutions in the country?
It's the leading market share in ransomware, and that's publicly known.
Right.
It's the token of choice for ransomware. Joe, if I can say, the U.S. dollar, the euro, the yen, you have the whole society using it as a medium of exchange. We buy our cups of coffee, as I see here.
Great, Gary.
We get paid in dollars or yen or euro. And you have a whole central bank and support for one currency generally per economic region. That we don't have here. So there is a very real economic difference.
What are you even talking about, Gary? Genuinely, like it's not that I just hate this man. It's genuinely not. When you listen to him talk right now, how does anything he's saying right now have anything to do with the point of the amount of illicit activity that's associated with USD? And it's not just USD, right? Like there's nothing unique about USD. As long as we issue paper notes, even if we don't issue paper notes, but even paper notes are the number one way that illicit activity is conducted because there isn't any sort of transactional records associated with that, where with blockchain, there's a lot of proof about that, right? We know exactly what happened, when it was confirmed, what wallet it was sent from, and what wallet it was received in, right? That's exponentially more than we get with the US dollar or any other paper currency, right? And there's tons and tons of illicit activity that happens with paper currency to this day. So he's trying to say to this, that the central banking system eliminates any potential risks of that. But that's not true. Look at HSBC, guys. Go ahead and look it up. I've read this entire 30-page, indictment when they got in trouble years and years ago for basically helping the Mexican cartel launder money through HSBC. Like it was millions and millions of dollars, and they got hit with a fine that represented, I think, like 1.3% of total revenue for the year from HSBC. The banking system is explicitly used to move money around the world for cartels and other people who have other bad intentions. Why? Because it's profitable. You guys can actually go watch the documentary on this. I think it was called Dirty Money or something like that. It's on Netflix. It's like a 6-part series, and they just talk about different people that get in trouble for different variety of things. But
Wasn't
HSBC
Dirty
was
Money
one of those.
the GameStop AMC movie? Or no?
No, I don't believe so. I think it's Dumb Money.
Yeah, you're right. My bad.
So Dirty Money is a series. It's like 6 individual little like mini docu-series. But they talk about all these banks that basically barely get in trouble. They pay these tiny fines. Nobody ever goes to jail. And they were not just like, oh, we didn't know this was happening. They would hire people to sit in these centers where they're supposed to be flagging fraud, or when like a transaction comes through and it looks like it could potentially be fraudulent, they just tell them, don't worry about it, just pass them through. And they have proof of this, and still nobody went to jail, right? So there is this motivation for people like Gary, who work closely with the central banks, to make sure that this activity does keep happening, right? They don't care. It's not about keeping people safe and keeping illicit money out. It's about control, and that's what it comes down to. And they don't have full control over crypto right now. They have full control over the banking system, not full control over crypto. So that's what makes it something that they don't want to see continue, right? Because they don't have any ability to have governance over it.
All right, last stretch here.
Real economic difference,
which is part of the attraction, since it's decentralized, and you can't have a profligate central bank.
It's not that decentralized, Joe.
Well, I know you're saying because of the ETFs, but really it is
it's
for
not
DeFi
that decentralized,
and everything.
because look how finance tends towards centralization since antiquity.
Right.
So what do we have? We have a handful of 3 to 6 core so-called crypto
I understand,
exchanges.
but the asset itself, the way that
That's
the
how the
distributed
accounting ledger.
Right. That's how the ledger. And
now, how many times do you have people on this show that say, "I want to invest in something because how the books and records are kept"? I mean, Joe, really? It's just an accounting ledger.
That's true.
A clever.
It's a ledger that everyone has, and can't be double counted. It's almost immutable. That's why people think it has inherent value.
So you trust it more than an Oracle database, or you trust it more?
I trust it more than a lot of the Bitcoin bulls say they trust it a lot more than the central bank that enables the fiscal authorities to spend money to the tune of $33 trillion.
Bingo.
That's everybody's investment.
I think we can stop there. Any final thoughts here on Gary? Go, take it away.
He doesn't even have a leg to stand on here. He, as the chairman of the SEC, approved spot Bitcoin ETFs. So there have been hurdles, right, previously with getting these spot ETFs approved, lots of denials for years and years. And finally, within the last year, we've had judges say, hey, this is unreasonable reasons to deny a spot ETF, and basically twisted the SEC's hand into approving it. But even though that was the reasoning behind the actual approvals, he approved it. So he still decides to sit here and talk about Bitcoin as if it's this very risky asset for money laundering. And I mean, we could talk about any DLT solution, but let's Bitcoin specifically, right? How can you even say those things, right? So which is it? Have you as the SEC said it's safe for investors to invest in something like Bitcoin and to accept that there's market risk associated with it, but it's an asset just like any other asset that you should be able to have exposure to if you want to, because there is no post-sale obligations that make it a security, right? It's not a security. It's the underlying asset is not in itself as a security. So I think that he's just still on his same script that he's been told to spew for this entire time, and is not adapting and adjusting, because he just sounds really stupid here. I do hope in the future we don't have somebody like Gensler. I hope we have somebody like a Hester Pearson as the head of the SEC so that we can make more progress in this coming decade. But I hate that Gary continues to beat on this drum that's antiquated now. It doesn't even make sense.
Yeah, Maddie. Team, if you wanted to watch that whole thing, if you think I cut it off too short there, you can go, I'll drop it somewhere, either in the description or in the comment section. You can go watch that and give me your whole feedbacks of it. We're not going to sit here. We already went way longer than what I thought we were going to spend on that video. But that was necessary, Maddie. You have gone at Gary at lengths on the live show on the website, and it was just time to bring it to YouTube. And I'm glad we did. And even though he's a Bitcoin maxi, Joe Kernan, shout out to you, because that obviously looked very uncomfortable, because even your anchors there are like, let's talk about Jamie Dimon, which Gary Gensler is a worse person than Jamie Dimon when it comes to crypto. Jamie Dimon can sit up here and talk all the nonsense he wants about crypto, but just look at JP Morgan. Like, we don't even need to get into this again, but Gary will sit here and just regurgitate the same talking points I've heard for the last year and a half.
It's gross.
And I just really don't like this guy. Maddie, to end off the show on a positive note, I went back to Answer the Public, a lot of crypto questions in there that I think would be valuable. And I just want to throw some at you. Quick thoughts, quick responses, whatever you got, let me know. To start here, what is a crypto airdrop?
So airdrops are essentially the ability to receive a token by holding another token. So you can, sometimes it can be done with NFTs as well, but it's really associated with tokens. One of the things you have to be very careful with airdrops is, one, watch out for scams, because there's a lot of scams out there for airdrops. They want you to connect your wallet to something and say, oh, you can get 10% extra XRP or XRP Doge or something, right? Whatever they call the airdrop, right? But then you connect your wallet, ends up being a scam. You sign the transaction, they drain your wallet, and that's it. You're done, right? So be very careful with that. The other thing you need to be careful with airdrops is, I never ever buy a token just to get the airdrop. So if I don't already own that token because I like it and I want to, sell it at a higher price in the future, the risk with that is that there's going to be a big price appreciation as people are buying it to get the airdrop. Airdrop comes and a lot of people start dumping those tokens because they don't need them anymore because they've gotten the airdrop. So those are just things to consider when you're doing airdrops. Just be careful with them. Don't connect to things you don't understand. And if you own the token, you want to get the airdrop, go ahead and connect and get that airdrop. But it's basically just a secondary token that you can get for holding the other token.
What is a crypto arbitrage?
Arbitrage can be a few different things. So some people will do swap arbitrage, which is probably like a less common arbitrage. So if you have a large enough position size, you can make money on the funding rate. So in foreign exchange, we have something called a swap that happens every 24 hours. So if you hold your position for more than 24 hours, if more people are long than short and you're long, you're going to pay a fee or a swap every 24 hours to the shorts for holding that position, and vice versa. You'll get paid every 24 hours if you are the minority in that group. So let's say price is moving kind of sideways, but it's not really going up or down. And in crypto, that funding fee is paid out every 8 hours. If you see the funding rate is, you think the price is going to move sideways and you think the funding rate is going to continue to pay you, you can go with the contrarian position, hold the position, not necessarily looking for a directional move, but then collect that fee every 8 hours. Now, again, that only really works with large amounts of money. And then you can also arbitrage between exchanges. So again, this is always going to be contingent on like what you're trading and, the price of that asset. But let's say, we have seen this before, let's say the price of Bitcoin on Coinbase is, $40,000, and let's say it's 40,100 on KuCoin, and maybe that delta is pretty big. So maybe you're able to buy it on Coinbase, go and sell it over on on Binance or KuCoin or wherever it's offering a higher rate, and make the difference in between. Now remember, there's trading fees. There are the risks of price changing between you sending the coins from your exchange to another exchange. But those are kind of the two big points of arbitrage. Now there are liquidity pools that you can engage in DeFi that do kind of like arbitrage plays for you. But those are the two main like kind of blanket arbitrage plays in crypto.
Maddie, I would imagine those arbitrage plays were a lot easier years ago when there was these marketplaces where there's probably a bigger differential. Is that correct?
So they still do happen today. You're going to find those bigger arbitrage opportunities when there's more volatility in the market. So as price is really rocketing or price is really tanking, that's where you're going to generally find those bigger differences. But there's also a little bit more risk there because, again, price is moving very quickly. You don't know what that price is going to be by the time you move your Bitcoin or whatever to the other exchange.
Who controls the crypto market?
You guys aren't going to like this one, but it's not me, you and your neighbor. It's market makers, guys. They're the ones who provide the liquidity to the markets. They place orders on the buy and sell side to create liquid markets for us. It is an absolute necessary evil, but they're the people who control price because they, essentially help drag price around to areas of liquidity zones. So if there's big area of interest that's left behind lower down, a lot of people are very surprised. They're like looking online for a catalyst of why prices are moving down. More often than not, it's just market makers driving price down to that big liquidity zone and larger players pushing price with large orders down to those liquidity zones. So it's market makers that move the crypto markets.
If you guys are interested to know about market makers, that was like, I think, a big red pill moment for me in crypto when Maddie and Dan actually broke that down for me. So if you guys want to know about that, drop that in the comments. Will crypto crash again?
I promise it will. I think that's every time we get into these bullish periods, everyone's like, well, this cycle is going to be different. And I never think that we have to get a one-to-one crashing scenario, right? But I even pointed back and, to the last cycle where we had, and a lot of people are like, well, C19 was different, so that we don't have to get that big of a crash. I agree. But when you look at what we did from a retracement standpoint, right, coming from an all-time high, came down, crashed to multiple new lows, came in for a 618 retrace, and then came in for a 50% crash prior to the C19 sell-off. So that was a 50%, and it wasn't like a steep sell-off. It was just a nice correctional flag back into the breakout zone. And if we had not gotten that C19 Black Swan event, we probably would have just been good with that base and moved higher. But that was a 50% crash that happened without any fundamental shift in sentiment or narrative or any of those things, right? So crypto crashes will continue to happen. You get these big periods of expansion without any pullbacks. You can expect that eventually we will get periods of contraction within the markets. That's just the nature of markets. They do not go up in a straight line. As much as you want to have the supply narrative and ETFs, taking Bitcoin $1 million, and everyone who didn't buy right now at $48,000, $52,000 is an idiot. There's always going to be opportunities for higher lows within all markets.
Last question here. Will crypto survive?
Most crypto will survive. I think that there's a good portion of crypto that will hopefully get regulated out in the next 5 years. And I'm not talking about I want people's freedoms, taken away, or people can't post code online and engage in whatever protocols they want to engage in. But I do think that people should be aware of what's actually being provided and understand what a crypto asset really means. Once we have a more clear definition, and then we can kind of separate, the top tier quality assets from, hey, this is just a protocol that doesn't actually provide any value, but people can still engage in if they want to. I think that's a really nice blend. But the sooner we get to that point, the more mature money will pour into this market because they're going to feel confident about the asset class. I don't think it's going anywhere. I think DLT is here to stay. Absolutely.
Based, Maddie, based. W's in the chat for Maddie. Matt, this was a great show today. I love this show. We went way too long. But I think it was important. I think it was important to, talk about our favorite person and get to these crypto questions. Maddie, you were on a roll today. Team, the Ask Maddie show this Wednesday, 2:30 p.m. Pacific. Leave your questions down below, and I'll bring it up. If it's extremely positive, I'll bring it up in in a loving manner. If you throw some hate at us, I will still respond to it. So other than that, Maddie, we will see the team on Wednesday. Bye.